today's home Pathshala. It will transform your dream into reality.
Good afternoon, my dear student. Today we are going to learn the technique of financial management. In my previous class, in my previous video, we have learned the function of financial management. Today we are going to learn the technique of financial management. The technique of financial management, what are the important technique of financial management? The technique of financial management is a technique involving the planning, organizing and controlling and directing financial resources. This is our main work to utilize the financial resources properly. That's why we utilize the planning, directing, controlling for purposes to achieve the organization goal. What is the core? In the core financial management technique, main technique is the budgeting. The budgeting is a roadmap for income and ensure the funds are allocated appropriately for business and personal needs. For income and ensure the fund allocated appropriate for business and personal needs. Next important after budgeting the cash management. Cash management the track incoming and outgoing the cash. From where the cash procure or income or where we utilize the cash, this is the outgoing of the cash. Cash management is related with the liquidity and ensure the short-term liability. Cash management also make the short-term liability. Next important financial management technique is the ratio analysis. What is ratio analysis? Ratio analysis is a measure the performance by analyzing the financial investment. Analyzing the financial investment. Including the profitability is a very important ratio. Next, liquidity ratio. Third, efficiency ratio. Next important technique is the capital budgeting. Capital budgeting is a very important for the long-term investment. Capital budgeting is related to long-term investment opportunity. NPV method, NPV is net present value method. IRR, internal rate of return, determine the project worth. These are the very important area. Next is the working capital management. Working capital management balance the current asset and current liability. Working capital is a concept which is related with the current asset and current liability. Next important area, debt management. Debt means the borrowing capital and how ensure debt to income ratio remain healthy and avoid insolvency. And risk management. Main objective of risk management, identify and mitigate the financial risks. Mitigate and identify financial risks through hedging, insurance, and diversification. So these are the core financial management techniques. Next important area is the current asset management. So, my dear student, you have to remember the current asset. What is the current asset? Current asset means the working capital. Working capital, current asset means the working capital. Working capital management is a very, very important part of financial management. Working capital process of optimizing the company's short-term asset. Working capital is related to short-term asset and liability. The current asset, short-term asset or the current asset. Current asset, what is current asset? Cash, inventory, account receivable. These are the current assets. And what is the current liabilities? The current liabilities like account payable to ensure sufficient liquidity for day-to-day operation. The current asset, working capital main area to work with the current asset and current liabilities. These are the important area. What are the key component of working capital? First is the cash management. Cash management, maintaining adequate cash reserve to cover operational expenses such as payroll, supplier payment. Inventory management to meet the customer demand without overstocking, which tie up the cash. Account receivable management, managing credit term offered to customer to ensure timely collection and reduce bad debt. And account payable means managing payment to supplier. Account receivable means managing credit term offered to customer, and account payable means managing payment to supplier to maintain good relationship while maximizing cash on hand. These are the important part current asset management. Next important area, the importance of working capital management. Why are working capital important? Ensure the liquidity. Ensure liquidity. Ensure liquidity. The prevent business failure by ensure obligation on mail. When business profitable on paper, improve operational efficiency, minimize the ideal resources, improve the speed of operating cycle. Speed of operating cycle is an important area. Enhance the profitability. Optimum use of fund and reducing the need for expensive short-term financing. This is the enhance the profitability. This is a working capital formula, very important. Current asset minus current asset minus current liability. These are the formula of working capital. And we have to remember what are the current asset: cash, inventory, account receivable are the current asset. What are the current liability? The current liabilities are account payable, bank overdraft. These are the current liability. And under the section of technique of financial management, after the core financial management technique, we learn the working capital management. Next important area is the fixed asset management. What is the fixed asset management? The fixed asset management is a very important the capital budgeting technique. Fixed asset management is related to the capital budgeting. The capital budgeting is a strategic process. What is capital budgeting? Comprises the use to evaluate, compare, select long-term investment project. Long-term investment project. Capital budgeting is always, you have to remember, long-term investment. Long-term investment projects such as new machinery, plant, product in order to maximize shareholder. It involves analyzing the projected cash flow to prioritizing the project. Ensure limited capital is allocated to most profitable opportunities. The key aspect of capital budgeting, number one, the long-term focus. Investment typically spans several years, are often irreversible and financial outcome. Long-term focus, capital budgeting is related for the long-term focus. What are the key method? The key method of capital budgeting is the net present value method. Calculate the difference between present value of cash inflow and cash outflow. If the positive NPV, positive net present value, indicate the viable project. Internal rate of return, the expected compound annual rate of return, finding the discount rate that make NPV. Finally, payback period, measuring the time required. Payback period related the measuring the time required to recover initial investment, often used for the risk assessment. And profitability index shows the ratio of the present value of future cash flow to initial investment. So these are the important technique of financial management. So my dear student, so if you study this concept clearly, area of financial management, it will help you to solve your questions on financial management for your upcoming exam. So keep touch. Any queries, you send SMS through my WhatsApp. If you want to take any guidance from myself, you may contact with me. Thank you.